So despite a weaker market in Europe generally, what we still would come back to is on an economic scale, Poland, Czech Republic and Hungary all remain well positioned to take advantage of improving demographics, growing economic situation, in particular the logistics sectors in all of these markets are outperforming across Europe. The other side of that is when we look at labour markets in these countries, the average hourly wage is substantially lower than the rest of Europe. And one of the big things that Savills has noted in recent months is more cost-conscious occupiers. So in that regard, CEE continues to distinguish itself. Looking at things in terms of the occupier market, which is one of our key trends today, while we are still seeing weakness in the occupier markets, both in Europe and in CEE, we've seen quarterly increases in both Poland and in Czech Republic in terms of take-up, which is very positive to see. While the vacancy rates remain high and have really been driven higher across Europe by the CEE markets, we've also seen pipeline development really respond to weakening markets. In Poland, it's down about 50%. Similar story in Czech Republic, with the Hungarian market being a bit slower to respond. That has had an impact on rental growth, which is slowing, but at the same time we've continued to see a certain level of rental growth over the last year or two in these markets. Talking about the investment market, which I think is quite interesting, what we've seen is relatively slow start to the year in 2025, a lot of that uncertainty around tariffs and other geopolitical events really having an impact on these markets. But if we look specifically at Poland and we look at the spread between prime yields in Poland and prime yields in Germany, its neighbour, there's about 200 basis points spread at present compared to a historical level of about 100 basis points. So as yields start to tighten in Poland and the rest of Europe, we'd expect to see Poland tightening at a faster and deeper rate, which presents a significant opportunity for reversionary returns in these markets. Beyond that, a few major macro trends that we're really paying attention to. In terms of nearshoring, Poland, Czech Republic rank really highly. In terms of e-commerce, all of these markets have a lot of room to grow as their e-commerce and online shopping trends continue to mature. And finally, as a piece of a bit of a plug for Savills, we've just released a defence report. We believe there's about 37 million square metres of defence-based demand coming down the track over the next 7 years. And Poland will be one of the big beneficiaries of this increase in demand. We'll present proportionally about 800,000 square metres of demand across the next 7 years.